Okay, guys and gals, about 10 seconds of the obligatory disclaimer. If you want to read the whole thing, just pause the video. Okay, welcome everybody. Let's take a look at what happened in the stock market today. Okay, that's that little green candlestick right there. Let me zoom in just a little bit. Let me zoom in. Clear the screen. This guy, we're talking about that candlestick right there. This one. Okay. Daily chart. S&P 500, E-mini S&P 500 Index Futures, March 2022. Today, for you premium members as well, they're going to come up a little bit. I'm going to do the hourly chart for you guys. I'll even look at the monthly and weekly today. Okay. But for the premium members, I'll cover the hourly chart. Okay. And I'll do all the futures products probably tomorrow. Okay. I might do those like just a few times a week, not necessarily every day. Daily chart. What's happening here? What is happening here? Yeah, February 7th. And this is also daily. These are both daily, just slightly different daily cycles. 2-3 and 2-7. Okay, so I've been talking about this. By the way, this was January 13th low, and it came on January 10th. Guys, it's pretty doggone good. Right? Look at this candlestick. Look at the lower wick in that thing. 45.72. Okay. 230, whatever it is, more than 30 points. 35, 36, something like this. That's serious. That was a big move. Okay. But the real thing I want to point out is this was January 13th right here at this cycle low. For those who don't know what a cycle is, well, this is little cycle right here. And there's one that goes like this. Okay. That is just where prices tend to decline into those cycles lows, like it did here and like it did here. Okay, it's within 3 days, guys. That's awesome. We call that the principal variance. Okay, really good. Okay, knowing that this cycle low is due in this time helps you prepare, right? Should help you prepare. When you start seeing prices stall like that and get a big red candlestick, okay, well, you know you're heading towards this cycle low. Okay, so now the next cycle low is right around February 3rd or February 7th. So here, I've been saying this, I'm going to say it again. I think you should be prepared for like the very beginning of February, the 1st or the 2nd of February, all the way out to like maybe the 8th or the 9th. Okay, maybe February 2nd through February 8th. That's the time frame that I would definitely be cautious about. Or at least just be aware that prices could stall or decline down into this time frame, okay? So pause video, rewind it, listen to it again, February 2nd through February 8th. That's where I think you're going to see price declines, okay? All right. So just looking at this, you know, the MACD still looks kind of weak here. It is above the zero line. If I just pull that down a little bit. That purple line right there is the zero line. Okay, but it's above it, but it still looks kind of weak to me. The Big Daddy's trying to point down. The stochastic momentum index is pointing up. This could do one of these things and then go up again. That happens like it did here. That's kind of common. So we'll wait to see what happens. But I think overall, just as I'm looking at this, and I haven't looked at the weekly and the monthly yet, so we'll do it together in this video. Okay. But just looking at this MACD, kind of looks, you know, overall, I think prices are going to be, you know, heading towards that. You know, I don't know if they're going to be way up in here. Maybe it's all-time new highs, whatever. It doesn't really matter. Okay. Just be aware that something's going to happen probably in that area. Okay. Let's take a look at. Take a look at the monthly. Let's swing over to the monthly. Okay. And let me get the monthly drawing chart. That's a huge monthly chart. My goodness. Let's back off on this thing. This thing is huge. Huge. Okay. I think I said June, right? Yeah. June 30th. Okay. There's a monthly cycle low do, and I know it's kind of hard to see because this ridiculous run up has been going on for over 10 years, 15 years of the great experiment still going on with the Federal Reserve and BlackRock and the criminals in D.C. and whatever else. And our duly elected president, sorry, I had something caught in my throat there. They're all doing such an awesome job. Excuse me while I get a drink of coffee. All right. So anyway, that's June 30th. Okay. And big purple cycle here on the monthly chart. Yeah. I still see a massive divergence going on here on this indicator as it's just doing a big rollover. And this one too. Okay. And we have not come out of any crazy lows. They were way back here. So these are not false flags. These divergence indicators going on here. Okay. So what do I think? I think June, middle, kind of late spring, middle of summer, maybe even late summer. That area right there, boy, that looks risky to me. That looks risky. And I said it before. I'm going to say it again. The S&P 500 will come down over 1,000 points. Will it do it this summer? That I don't know. This entire area right here is 2022. That entire line. I don't know. Maybe we will get the big decline throughout the entire year. Maybe it'll slowly make its way down. It might even go into 2023. Well, I don't know. We'll see. Usually these things play out usually over a long period of time. But sometimes, I mean, look at this. We're on a monthly scale here. Even the pandemic barely got, it just like had 1 month where the lower wick got below, it really just one serious month where the lower wick got below the 50 month. Other than that, this was not even a crash, guys. Okay. I mean, percentage-wise was probably pretty significant, but looking at the 50 month, it got below it for like 1 month and a little bit of the next month, and that was it. It was over. Okay. Of course, we know the Federal Reserve now is going to pretend like they know what they're doing and they're going to raise interest rates. And then they'll probably panic and then stop raising interest rates. You know how it is. Every time they touch interest rates, the stock market crashes and then they go into a panic. They're morons and idiots because they think they know better than free markets. So anyway, that's my take. I think we'll get a 1,000-point decline. I think it could happen in 2022 and it could go into 2023. We'll just see how it all plays out. And why do I say that? Because the stock market always returns to the 50. And it'll do it again. It will do it again. Maybe it's like that. Maybe it's like that. You follow me, guys? Let's do this one more time. Not that I'm doing some long-term analysis right now, but this is 2 years. This is 2022, just for those that can't see. And then this is 2023, okay? So this is the rising 50 on the monthly chart. Remember, we're looking at monthly. Okay, y'all getting some serious analysis here for free. Okay? So let's just say that this 1,000 point, and I think it'll be more than 1,000 points, okay? Because right now we're at about 4,800 was the high, down to 30 is about 1,500 points, okay? But from where we're at right now at 4,704, I could see 1,300 points, okay? I'm not saying the crash is going to start now, but it might. So here's the deal. What do I think? Well, let's say it all happens in 2022, then it would be like that, okay? It could happen much quicker, whatever. If it goes to 2024, I'm just taking these to the end of each year, right? So it could be something like that, something more mild that just does the big, and by then, guys, who knows? Maybe the price is up here, and you know what I'm saying, and then it's more sharp. You know what I'm saying? So it just depends how this all plays out. But I think 2022, 2023, whatever, take your pick. I think you're going to see a 1,000-point decline or more. Okay. And I could see it happening coming into summertime. It could easily happen, especially with the Fed pretending like they know what they're doing. The pretenders, with their pulse on the domestic USA and world economy. We know what we're doing. We'll save the day. Yes, sir, we will. Even though we've created every bubble and crash and created inflation and the biggest idiots of all time. We're still paying for the war. You guys all know that, right? Which war am I talking about? The first Iraqi war. People don't even understand that. As I go off on a little bit of a tangent here. Do you realize that we're still paying for the first Iraqi war? Yeah, and most people don't even, people not even aware. Oh, it's the housing bubble. It had nothing to do with no damn housing bubble. The loose money policy was to finance the damn war. And once the money starts getting into circulation, where does it go? Well, it hits banks and lenders. And what do they do with it? Well, we've got to loan it out. Cheap and easy. I know people who had no business getting home loans got home loans. Why? Because they financed a war. Both Iraqi wars, guys, that's what led to major financial instability. Printing up damn money. And of course, once it got started, as always with all these wars, it never stops. Anyway, I digress. Let's move on to the weekly. I always hear from people, oh, well, it really wasn't the war, was this. I'm like, yeah, I don't want to hear it. I really don't want to hear it because I know they're wrong. The wars triggered all the loose money. It wasn't just triggered because somebody decided somewhere to loosen up policies for lending for mortgages. That's not what happened. The money was loose and printing like mad for tanks and ships and soldiers to be fed, diesel, gas, you name it. Aircraft carriers have to be trekked halfway across the world. Okay? We're still paying for those. And then, of course, the debt ceiling, they always raise. You ever notice that Congress never balances? Never. You ever hear about balanced budgets? They never balance the budget. Never. I've never heard them balance a budget. Not in 20, 30 years or longer, if ever. All they talk about is reducing spending. Think about it. Congress talks about how they're going to reduce spending. They don't talk about balancing a budget. You never hear balanced budget. It never even comes up. Congress doesn't even talk about it anymore. They just talk about reducing spending. What they're really saying is that we're going to spend more than we tax, which means they have to print money or go into debt. Both, right? Think about it. Think about if the average American didn't balance their checkbook. They'd be freaking bankrupt, and some people do go bankrupt. But the responsible ones, the ones that have at least some kind of moral compass and financial compass, they balance their checkbook every month, right? They don't run in the red continuously. I mean, some people probably do, but a lot of people don't. They balance their checkbook every month. Right? They're economically wise. Imagine that, Congress actually saying something about we're going to actually spend only what we bring in. We're not going to raise taxes. We're going to keep taxes the same or reduce them. I remember somebody up there in D.C. in the White House said, I remember they reduced taxes. I wonder what that guy's name was. Anyway, whatever. We're going to reduce taxes, and then we're only going to spend as much as we collect in taxes, or even less. How about that? What if they imagine if Congress ran out of surplus and started reducing the national debt? These people are criminals, and that's being kind. They're worse than criminals. They're nation destroyers, world destroyers. That's what politicians are, the vast majority of them. That's what the George Soroses of the world are. All right, I'm going to stop right there. All right, weekly chart. Weekly, what's this? What is this one right here? Is that still 116? Yeah, 116. Very interesting. I know we're looking at basically 113, I think is tomorrow's. The session's already started for 113. Yeah, okay. That all worked out pretty good. 110, 113, 116. We could get a surprise, guys. We could get a surprise coming up in the next few days. I mean, it's possible. We could have a surprise decline in the market. It would not surprise me if something extraordinary happened or, another big drop. Okay? Like the January 10th or even more. It would not surprise me between now and, let's say, January 16th to see that happen. And then, of course, the whole first week of February looks very sketchy. Okay, the next weekly big down is May 8th. which is not too far from that June date. Okay, so that's it for the weekly. I don't really put a lot of credence in the weekly. I just kind of look at the cycles, and if I see something, I mean, there's some divergence here, but the weekly is just not a chart other than cycles. Unless I see it come down and doing one of these and it's touching the 50, then I'll talk about it. Other than that, I don't really talk too much about the weekly. All right, as I said earlier, if you want the hourly charts and a 5-minute chart, not just on the S&P 500, but all the futures products I mentioned earlier, $5.99. It's a great deal. You get a link to the Discord server. Okay, we also cover, believe it or not, solar cycles, because solar cycles impact the grains, which impacts cattle, which impacts food going to the grocery store. We actually have a channel on the Discord server for that. And I have fixed income channel in there. And soon enough, probably in the next month, give or take, might be 6 weeks, 4 weeks, 3 weeks, I don't know yet. Okay, somewhere in that time frame, month and a half probably, I'm going to be probably purchasing some corporate bonds. And when I do, I'll share it on the Discord server. Okay, but I'm not going to share it with the general public. So if you want access to that Discord server, pay the $5.99. Okay, you're getting all that for $5.99 a month. Okay, after Google rips me off for over $2 they take out of that $5.99. I think, you know what I get, guys, out of the $5.99? About $3.90 on the average. That's what I get. Google takes 30%, then there's some taxes because every state's a little bit different. So I don't even get the $5.99. You guys are getting an absolute bargain. All right? Subscribe to our YouTube channel. Give me a thumbs up. Don't forget to click that little icon on the bell to get notified of all the videos as they come out. Okay? Talk to you all real soon again. Next time, premium members, go into the hourly chart. All right, premium members. Let's take a look at this. Let's switch over to the hourly chart. What's going on here? Let me just, even though I just did this other day, I'm going to wash that chart, those cycles right out, because I care about you guys so much. I'm going to look at these cycles carefully on the hourly. Okay? For those that are interested in cycle analysis, it's always best to start the most current low that you can spot. Okay? And there's one right here. It's obvious, right? This is an hourly chart. Now, remember, we're talking hourly here. Right? Hourly. All right? So it's always best to start with when you see a low, where you see some kind of significant low, okay? Like there and there. Okay, this one stands out, maybe one of these two. You guys follow me? This one, maybe that one. Okay? Here, here, here. But it's always best to start with the most current, right? You don't want to start way back over here in the past and try to come forward. You want to start most current and work back. Now, there are exceptions to that. That's my own rule. Okay, there are exceptions to that. But let's draw it. Now, on the TLS platform, the way you do it is you come to the drawing tools, you come down, you grab that little puppy right there. They call it cycle brackets, okay? All right, so since we got the cycle bracket, let me just see what I can spot here. I just want to see if any cycles changed. Okay, so we're going to go like this. And then I'm just, the way the TLS platform works, the more you go, see the cycles get big and small. Okay, I'm going to you click once and you drag it. And then when you want to set it, you click it again. But I'm not going to click again because I'm just eyeballing this, okay? I see there's a low here and there's a low here. So I'm going to start right here in this candlestick. And I'm going to drag it over to this one. Okay? And then while I'm holding the mouse there, I'm checking other cycles, other cycle lows to see if they line up with, and they do for a while. They actually look pretty good for quite a while. Then, for those that do cycle analysis, what you're going to notice is, okay, that's pretty good actually, where we're at right here. So now, for me, you can choose whatever colors you want. Okay, I'm going to edit the properties. I like to use yellow for hourly. Don't ask me why, I just do. It's kind of become my thing. Okay. So, and then we're going to, let's talk about this. Okay. So you can clearly see, let me get the little drawing pencil. You can see that this is a low right here, right? And it lines up with this is where the two cycles come together. This is clear, it comes together, right? Here's another one, comes together. Okay, so that's what you're doing when you draw your cycles. When you pull your cycles like you saw me do with the mouse, that's the way you do it. Here's one right here. It's a little bit off, but it's okay if it's, a little bit off, but it's okay if it's a little off. Look at this one. Bam. Amazing. This one. Bam. Now, what you're going to find out as you go further back in time, which is that way, the cycles will tend to get out of sync with the candlesticks, and that's okay. You just want as many cycles from the most current, which is here, going back, as many as you can get. And eventually they're going to start to fall out of alignment. See how this one's out of alignment? And why? Because that's the way life is. Even on the Discord server, those that don't know about the Discord server, well, you can get the link in this video. There's a link to the Discord server. Get on there. But the solar cycles are on that Discord server. There's a channel for it. But even solar cycles aren't exactly perfect. Everybody thinks it's exactly 11 years. No, there's times we had solar cycles go out 13 years. We had some that were as little as 10 years, even 9.5. So life isn't always perfectly on rhythm, and it's true for the stock market too, okay? So this is pretty good because we're in pretty good alignment up to about, how good are the cycles? The cycles are pretty good from about right there all the way up to there, okay? The cycles are good. So how many is that? Well, 1, 2, 3, 4, 5, 6, 7 hourly cycles. Now, when I say hourly, that doesn't mean 1 hour. Okay, how many hours is this cycle? 22 hours. So the hourly cycles in the stock market have been running, at least for the last 7 hourly cycles, about 22 hours. Okay, and these are trading hours, by the way, okay? So understand that the S&P 500 trades about 23 hours a day, so don't forget that. All right, so with all that being said, now that we've pulled the cycles, I'm giving you guys a lesson in how to draw the cycles here, okay? All right. So let's take a look, because I may not be around forever, guys, right? But I'm going to be around for a long time, so don't worry. The next cycle low is January 13th, about 5:50 a.m. my time here in the state of Texas, Central Standard Time. Okay. There it is. Pause video, blah, blah, blah. Now you know. Okay. It may not be perfectly on time. It may not hit exactly right here. Okay. But it should be fairly close. Okay. So what do I think? Well, if it holds true, now I don't just look at cycles only. I'm looking at this too. The MACD is pointing down. I'm looking at the Big Daddy. It's kind of bottoming, but it's not there yet. And so is this. So we'll see. We could get a bounce here. It's possible. Okay, but for the moment, I think this cycle low that I just talked about, it could just come down, hit the 50, and kind of rattle around here and then take off again going into this next hourly cycle. You follow me? Okay, so now as I'm thinking in my mind, I know that January 13th through the 16th on the daily and the weekly charts, kind of something could happen there. So this is something I'd really be watching as we approach this hourly cycle. Okay, I'd be really paying attention to that because, something could happen. I'm not saying it will. January 13th, look at that, guys. 6 a.m. in the morning, almost. So I'd be looking at January 13th about from 1 a.m. in the morning, Texas time, all the way to going into that daytime session for the U.S. hours, right? Central Standard Time here in the U.S. hours, right? That's what I'd be paying attention to because it looks like we could get a cycle that the prices could drop down into this cycle low there. There's still a lot of potential for a price decline. Okay, January 10th might not. This is January 10th back here probably. Yeah, this may not have been it. It probably is it for that daily cycle. That's it right there. But it may not be. There may be more to it. Okay, we'll just see how this plays out. So I would be really paying attention to this hourly cycle low. If you don't remember what it is, pause the video, go back. All right. I'm not going to get into how you should trade and blah and all that stuff, okay? How you should trade? Well, it's below the 50. It's the 50 hour. You trade this big red candlestick. Okay, now that you're above the 50, you trade it long. Okay, if you're below the 50 and this gets below the 50 and stays below the 50 for a few candlesticks, you trade it short. And you do the same thing on a 5-minute chart. Okay, very simple stuff, guys. Pay attention to those daily cycle low, which is the 13th, also the first week of February, and the hourly cycle low, which, as a matter of fact, now that I'm going to finish up this video with this, that one's the 13th at almost 6 a.m. Central Standard Time here in Texas. The next one after that, for those that want to know, is January 14th, about 4 a.m. Central Standard Time in the state of Texas, USA, okay? There you go. Now you got them. Pause video, go back, make notes. Bingo, bingo, bongo. Okay, guys. Hope everyone had a good trading day. Talk to you all real soon again next time. I will put out probably all the futures products tomorrow. Okay? And we'll talk to you then.